This conference will now be recorded.
Okay, so we are again coming back to payment. Now, previously in the first phase of discussion, we worked on the payment processing, basically where we have used what are the different methods by which you can collect the payment from the consumer, where we are basically customizing different methods of payment entry for the incoming payments. Like we have seen, usually in companies like utility, they will have a cash desk facility like a walk-in payment where the consumer can go to particular cash desk and then provide the details of the invoice and thereby provide the cash for the clearing purpose. Cash is entered in the cash desk and then a online clearing will happen, okay, with the cash payment, and the contract account is credited, reconciliation account is determined, bank account is determined, which is basically bank clearing account, and then we basically send this information to financial accounting. You can also use the cash desk to prepare payment entry for the check payment. You can also enter the incoming payment for the credit card, or you can also do combination of them like check and credit or check and cash or credit card and cash. And then we implemented the lot payment processing where you are basically entering the bulk payment at a time, like bulk payment processing for the cash, for the credit card, and then maybe check payment, okay, how to prepare the lots and how to post. And then here also what will happen, basically we are entering and clearing the open items as per the particular scenario what you're having. But here there's no particular method by which we are saying the payment is cleared, okay. Let's say I'm a consumer and with the company I have no fixed arrangement how the payment will be cleared. So that being the reason, every month the utility company will prepare the invoice and send it to me. Then I have different options to make the payment. Either I can go to the cash desk counter and make the payment, or I can go to cash desk counter and give a check, okay? Or I can go to website of the company and then using the net banking, I can transfer the funds from my account in a bank to the utility company. So depending on my convenience or depending on my facility what I have, I will adopt one of these methods, okay. But for the company, it is basically not a fixed agreement with the customer, okay. But here what happens, I as a consumer sometimes, even though not by design, but because of the certain obstacles, I may forget to pay the bill, okay. Like I have to keep a track of what bills I have received, by which date the due date is there, when I have to make the payment. Sometimes I'm held up, I'm not able to go to the bank, or I'm not able to go to cash desk, or I may forget simply to make the payment on due date by the net banking. Okay. Then late charges will apply, sometimes disconnection will happen. And for the company also, it's a question of, keep on, following it with the customer for the making the payment. Okay. So to avoid this convenient both for the customer and then utility company, we can go for certain predefined payment methods. Okay, that means for the consumer, we will fix a payment method. The payment method as available in the country. Okay, there are different payment methods available in the particular country, and according to we can customize the payment method, and then we will enter the payment method in the contract account. That means we are fixing the arrangement with the consumer how they will be paying every month. Accordingly, we will take the action. That means here the initiative is happening from the company side. In previous scenario, I am taking initiative. I have to go to, let's say, cash desk, or I have to go to, let's say, website and then punch my details, net banking details, or I may be using debit card, credit card, or maybe some payment methods like UPI payment method. Okay, but unless I take the initiative, it's not going to happen. Okay, but why not we make it automatic so that my hands are off and then automatically payment will happen on the due date. Okay, that's where the payment methods will come into picture. Originally, payment method processing started happening in SAP in order to process what are called the vendor payments, and also in HR the payroll payments. Okay, basically if you take for example vendor, we have so many vendors and vendors will keep supplying the goods and services to us and we have to make the payment to them. So you basically enter invoice in the system. Vendor will send the invoice to us. It's called incoming invoice. We enter the invoice. So based on the invoice, we know what is the amount we have to pay, what is the vendor we have to pay, and then what is the due date. Okay. And also we have an idea of any discount you're going to get from the vendor if you make the payment earlier than the scheduled date. Okay. With all this information, we prepare the invoice, but how to make the payment to invoice for the invoice. Okay. Now again, here we keep on doing for each invoice for the vendor and the payment. It's going to take time. So we want to do bulk. Okay. Bulk processing. Every day some invoices are entered and they are due and you have to make the payment. Okay. One option is we process the payment method. Okay. The payment method allowed or available to us is by check. Okay. That means today I have got 100 invoices for the 100 contract account. 100, sorry, not contract account, vendor account. For the vendor account, the payment method is check. Okay. For all these 100 invoices, I run a payment run. Okay. A payment run. And I provide particular parameters by which the payment run should happen. And based on the payment method, let us say check. Okay. In the case of check payment, what happens? Automatically, when you run the payment, it will print the checks, given by our house bank. That means house bank will give us some kind of, numbers to be used. Okay. Checks are printed from the SAP system with the particular check design, what the bank is using. We'll build up that in our system. The numbers are also allowed to us. Each bank will give us some numbers which you want to print on the invoice for the financial year. So basically 100 checks are printed and then send it to the customer. So naturally vendor, naturally you should know what is the vendor address and then you can mail it or you can send it by any other methods. Okay. That means one method of payment is check payment and it is basically an outgoing payment. It's an outgoing payment. That means payment is going from our bank to the vendor basically. But another method is, let's say, bank transfer. Okay. That means vendor will provide us the account number, their account number, and the particular bank in which they are having the account. Okay. That means we know for the particular vendor in which bank they are having the account, what is the account number, and then payment method we call it as bank transfer. So you run a payment run with the payment method as bank transfer. Automatically what the system will do, it will prepare one electronic document. It will prepare one electronic document which will contain the information of what is the vendor number, what is the invoice number, what is the amount, what is the due date by which the payment should be transferred to the bank of the vendor. That means we send this particular electronic document to the bank itself. It will go to our house bank, and from the house bank they will make a direct connection with the vendor bank and then credit the amount to vendor account. That means we are reducing again the work for the vendor. Otherwise, if you send a check to the vendor, vendor has to go and deposit in their bank and then it will come for clearance. It will take some time. And then sometimes they put the delayed check. Okay. So we don't know when the amount is withdrawn from our bank. So electronic bank statement, when they come, will take a lot of time for the reconciliation. Okay. So we will run the payment method based on which it knows it's a bank transfer, it's an outgoing payment. The moment you run the payment run, it will prepare an electronic document, and this document is basically sent to our bank, and bank will use the particular clearing house to clear the payments directly credited to vendor account. Okay. So that means basically a particular format is used for electronic document using which they can actually credit the amount to the vendor account. Okay. So either bank transfer, or you can make a check payment, or you can also make cash payment. Okay. The vendor will come to us and collect the cash on a particular date. Okay. So these are all the different methods we fix with the vendor, and accordingly we run the payment method. Same logic is also used for our own employees. Okay. One method of employees, we'll prepare check every month and give it to the individual employee, who will deposit the check in their bank, and then they get the salary drawn, or it is deposited in their account. They will do the job. Okay. But instead of that, why not we process the payment, the salary directly to employee bank account? Okay. So if the employee can give the bank account, which is necessary, so we process the salary for the particular month, and the electronic document is sent to our house bank, and house bank in turn will take care of transferring the salary to the employee bank directly, okay, to the bank account. That means again a kind of a bank transfer. Okay. That means here we are doing recurring payments and in a bulk. Okay. It will help the company, and also it will reduce drastically the charges in processing the payments. Okay. So these are basically bulk payments and recurring payments. The same logic started applying for the customers as well in the due course of time. Okay. Now there are so many companies where they have to get the payment from the customers. Okay. Especially like the telephonic companies, or let's say utility companies. Utility company has to get the payment from the consumer every month. It's a recurring activity, what is happening every month. Okay. But every time we prepare invoice sent to the consumer, then consumer will take the initiative and then make the payment. Instead of that, why not to work out some kind of incoming payment method? Payment method is like say direct debit to the customer account, direct debit to customer account, or direct debit to the credit card. Basically direct debit to the customer, in the sense you basically make an incoming payment for the customer to be sent to customer's bank directly for the payment clearing. Okay. That means we will send the invoice, we prepare the invoices and post in the system. We know for each customer what is the invoice number, what is the due date, and then what is the amount. Okay. Then we have one or many house bank. So let us say for all the incoming payments, we have got one house bank. For outgoing payments, one bank. So every day we do the payment run according to invoices what have been prepared. A electronic document is prepared and then sent to the bank. Bank in turn will basically debit the bank account of the consumer, bank account of the consumer, and then payment is withdrawn from the customer's bank account. Okay. That means customer can authorize the utility company, look, this is my service number and I agree for direct debit to my account. And also they will authorize the bank, their own bank, for so and so utility company, I have got a utility contract, and every month they'll be sending the bill and you can make the payment. Okay. Again, you can have variable direct bill, direct debit, and then you can have a standing order. Okay. Standing order. That means, let us say I want to limit my exposure. So if utility company is going to send every month a fixed amount, okay, I mean like a budget billing, then customer intervention is not required. The moment the invoice is presented to the bank, the clearing bank, automatically payment is transferred. Or it can be variable direct. We can also give a range up to what particular range. Every month I'm expecting the value between 5,000 to 6,000, or sometimes maximum 7,000. Whenever the payment comes, directly bank can make the payment. Okay. Or manual clearing. That means and this has to be done variable direct. What happens? The consumer has to give an intimation. With a standing order like budget billing, the budget billing agreement is there with the contract account, and you have fixed the amount with the consumer. Every month you have to pay 7,000 rupees. Okay. And the payment will be due on 25th. So the consumer need not have to think about, what amount I have to pay. It is fixed. Only they have to ensure that enough funds are available in the bank so that, whenever the bill is presented to the clearing bank, the bank should be able to deduct the amount from the bank account and transfer the amount to the receiving bank. That is our house bank. Okay. That is basically a standing order. Okay. Where we say this is the amount every month it will come by this date, and the moment it is presented, it should be given. Okay. But if it's a variable direct, that means we are doing consumption billing, not budget billing. Every month you are going to prepare invoice, but the invoice amounts are going to vary. Okay. Some months it may be 6,000, some months it may be 7,000, some months it may be 5,000. So the moment bill is prepared, the invoicing company, the utility company has to send a advance intimation to consumer. This month you are expected to pay so and so amount. And then accordingly, they can check the provisions available in the bank and then authorize the bank to make the payment. Okay. So basically here the direct link is happening between our bank and the customer's bank. Bank to bank transaction will happen. So it will reduce the time period in terms of collecting the payment, or customer has to make the payment. Customer need not worry. That means they can't miss a bill being unpaid. It is happening automatically by involving the customer, their banker, and our bank will send the necessary document to clearing bank based on which they make the payment. So this is basically what we call direct debit. So basically direct debit means, direct debit is basically a process where the withdrawal is happening in a financial institution where the company withdraws the funds from the another person's bank account. Okay. Basically, you can say it is a withdrawal because by debiting the account of the savings account or current account of the company, we are withdrawing the amount from the customer's bank. And then here authorization is given to both. Utility companies said, look, this is my account, this is my bank. You are supposed to send the invoice details to my bank. And we're also authorizing the bank by giving a kind of agreement with them. So and so utility company is supposed to send the invoice to you, and on behalf of me, you can make the payment directly to utility company by debiting the amount into my account. Okay. So basically, the payee is the utility company, will instruct their bank to collect the amount directly from the payer's bank account. Okay. Here, payee is the utility company, and this payee is basically instruct his bank. Suppose our house bank is HDFC. Okay. Now, how will you inform them? We send a document. This is a consumer. This is the bank of the consumer, and this is the amount to be collected. So the utility company, the payee, will instruct their bank to collect the amount directly from the payer's bank account. But then how will know what is a payer's bank account? So if this method is used in the business partner master data, when you prepare, you have to maintain the bank details. Okay, in which bank they are having the account, what is the bank key, what is the country, and what is the bank account. Okay, and this information will be stored in the what you call the contract account master record. In the contract account master record, we will say payment method is the direct debit, and then the particular bank details are copied from the business partner data. So whenever you do the payment run, the system knows according to payment method direct debit, what is the bank of the consumer and what is the account. Okay. So basically all these direct debits are conducted through some clearing house. Okay. Like in USA, they got a clearing house called basically ACH, American, clearing house. It's called as American Clearing House. Similarly, in Germany, they have got a clearing house. India has got a clearing house. Clearing house is basically interface between the payee bank and the payer bank. Okay, so basically they will take care of the payment adjustment. Like if you got a check, suppose I deposit a check in my bank. Okay, my bank has to collect the payment from the person who has issued the amount. Okay, so here it's all done electronically. We transmit the data to clearing house. Clearing house will check with the deposit available in the check issuing party, and then make the bank adjustment. That means adjustment will happen in one account, it will be debited, one account will be credited. Okay, so that's the process here. So every country will support the clearing house. There will be clearing house, and a particular format will be available in which you have to send the document. Okay, for example, um, we can say about ACH payment. ACH is basically clearing house. The Payflow ACH, automated clearing house. It's not American. Automated clearing house payment service enables you to electronically collect the payments from your customers for either single entry or recurring payments. Okay. Single entry means one time. Okay. Or it can be recurring payment by directly debiting your customers' checking or the savings account. Okay. The most common uses of ACS are online bill payment, mortgage, and the loan repayment. Okay, that means you can have the loans collected, your online bill payments, mortgage, and direct deposit of the payroll. In one side it is crediting, and one side it is debiting. Okay, if it is payroll means you are crediting to the employee account or vendor account. In another case, we are collecting the amount from the customer. It's an incoming payment. ACH payments are efficient and cost reducing alternative to paper checks and credit cards, okay, on the internet. ACH is primarily used for person to person, P2P or business to business, okay. Person to person means we can say I am staying in a particular rented apartment and my apartment is owned by somebody. Every month I have to give the rent. One thing is I can go and give personally cash to him, but again it is time consuming activity, or I can write a check and give it to them every month. Again, the person has to go to the bank and then deposit. Instead of that, I'll set up a bank transfer every month recurring. That means every month by this date, so much amount should be taken from my funds and then directly credited to the rent account holder. Or business to consumer. In business to consumer, we are actually asking the customer's bank to make the payment by debiting the amount in the customer's account. Okay, business to business payment collection in the case of customer, or business to business payments like vendor payments. Okay, so basically for customers it is providing which is an alternative to credit cards and checks. Okay, because credit card means again we have to some in some countries credit cards are not very favorable. Okay, like in Europe, whenever any online purchasing is happening, if it is insisting for credit card, they won't purchase. Okay, they somehow feel credit cards are risky and they don't want to do business, but they are very happy if you go for net banking, direct debit. Okay, checks is again a consumption, time consuming, and also the time you realize the amount, it will take at least 5 days. Credit card will take 2 days. Okay, but whereas in the case of direct debit, it can happen very quickly. Okay, offer lower cost payments, either checks or credit card. How does ACH work? Okay, so basically the process is given here. You can also go through it. A customer visits the biller's website. After customer authentication, username and password, biller web server presents the billing information. Okay, that means first I have to register with the billing company, utility company, saying that this is my username, this is my password, this is my contract, this is service number, this is my bank, and this is the account number. The customer reviews the bill. When the customer schedules a payment, your website collects the payment information and using the Payflow securely sends it to PayPal processing or data specified by the customer. Okay, so you can use it with different methods like PayPal or Biller Direct. Okay, so there are different methods by which the payment will be collected. But here, ACH house, clearing house will take care in terms of interfacing the customer's bank and the business partner bank. Okay. Now you also have what you call the in India we have got NACH. Okay. NACH is the clearing house in India, which has got basically available for basically in such cases where you are doing the electronic processing. Okay. Electronic processing. So if you take ACH. I got one more document which is not shown here. Okay, basically NACH is equivalent to ACH. Now the clearinghouse has come effectively some time back. Now most of the time in Indian environment, again now these days utility companies they are using this facility for basically direct debit to the customer account. Basically, simple agreement will be there between the utility company and the contract account, and based on that, the payment processing will happen. So basically, how the processing will happen here? Just let us write down here the process, how it is going to happen. Sorry. So basically here, this is the process how actually we're going to adopt in the SAP. So basically you can say utility company submit a request submit a request to his own bank, to their bank, and this bank we are going to call it as house bank. Okay, suppose the particular utility company is having a house bank as HDFC, so it has to send a request to their bank HDFC providing account information and amount to be collected from the customers. Okay, so it has to send electronically a document. This document will have some kind of a format. Okay, depending on the clearing house, a kind of a uh, platform independent. That means it is not company specific format. It is something fixed by the clearing house. Okay, like NACH or ACH. There are some formats. These formats are understood by the sending party, utility company, and also bank. Okay, they are interchangeable. Basically, the formats are available for each country, and these formats can be customized to some extent. So using these formats electronically, a document can be prepared in our system, and this document will have the information like what is the customer name, what is the customer account, what is the amount they have to pay, what is the due date. Okay, all this information will be there for all the invoices what you are sending. Okay, let's say today I'm sending payment collection details of 50,000 customers. These are all bulk payments. So for 50,000 customers, we prepared the document. That means after the invoices have been posted, this process will start because we must know what amount we have to collect from the customers, which means that information is updated already in the system by preparing the invoices. Once the invoice is debited to the contract account, we run a payment run, a transaction we do, payment run. And in the payment run, we select the particular payment method. Let's say payment method is the direct debit. Okay. And then it will pick automatically for all the customers what is the bank number, what is the account number, what is the amount, which is already debited to the customer, and the document is processed. Okay. Now, once we prepare the data, we send it to the bank. Okay. And then here, the clearing house will take the processing. Okay. That means once you send the bank will basically send the information to receiving bank. Okay, receiving bank. But there are thousands of accounts, so it cannot keep on talking to each bank separately. Okay, so the utility company bank will send the data to the clearing house. Clearing house in turn will check with the individual customer account and then basically debit the customer and then credit the house bank. Credit the house bank, and then house bank will send the electronic bank statement. Okay, end of the day bank will send a statement which is called EBS, electronic bank statement, showing these are all the amounts we have collected. Okay, that means we come to know which amounts have been collected, which amounts have not been collected, and then any shortfall is there, we can find out which customer has not made the payment. Okay, so then you can do further activity based on that. Okay, so basically this is a process what we want to do. So for this to happen, we have to implement the payment run in the system, which is called payments. So if you go to our customization, financial accounting new, and then contract accounts receivable and payable, and then business transactions, and then payments. Okay. So here you got processing incoming and outgoing payments, incoming and outgoing payment creation. Okay. For contract account, incoming can also happen, outgoing can also happen. Because in MM perspective, outgoing is always a vendor payment. Okay. But in FICA contract account, what is incoming and outgoing? Incoming is basically the amount to be collected from the contract account. That is the due amount for the invoice. Outgoing can also happen by using checks, okay, or direct debit, direct credit, bank transfer. Suppose we have got some excess amount paid by the consumer, okay, which we don't want to adjust with any receivable. It is locked for the adjustment. Or let's say there's a security deposit amount which has been released now, okay. So basically, we have to send the amount to the customers instead of adjusting with the open item. In that case, we do the outgoing payment. Okay, incoming payment for basically receiving the due amounts for the invoice. Outgoing can be happening through the again bank transfer or a check, where if you do bank transfer, it will directly get credited to customer account. Or if you prepare the check, check will be sent to the customer, and then they can put in their bank to get the refund back from the our own bank or the house bank. Okay, that's why it's called incoming and outgoing payment creation. Now here we have to maintain a series of customization, and depending on the payment method, the account determination, all this information we have to maintain. Okay. So I have prepared one document and I'll send it to you today. You can just go through it and accordingly we'll do the customization. So first and foremost, we have to maintain a note to pay type for the payment medium. Okay. Payment medium means basically whenever you do the payment run, a document is prepared, okay, using a particular medium structure. Okay, this medium structure is basically called as payment media. Okay, payment media. So in the payment media, we put the particular information what you have to send to the bank, but there will be a field called note to pay. This note to pay will have certain fields which will be filled up as the information for the payee purpose. Pay means utility company. When the bank will send the electronic bank statement, we can view that note to pay and accordingly you can do the clearing purpose. Okay, so note to pay. So if you go to the particular note to pay, maintain note to pay. A note to pay is given here as basically DTA US0, structure of note to pay. Okay, so there's a basically data medium. Okay, it's called DME. So DME structure and the DME tree can be maintained. It's a very high level customization, which you don't want to get into at this point of time. But we will say DTA US0 is basically a German note, German DME. We can also have ACH, DTAC0 or ACH or NACH. Okay. So a note to pay is maintained. This note to pay will be maintained in the payment method allowed in the company. Okay. So this is already available. We will use it. DTA0. And then we have to maintain first. There are three important individual customization we have to do. First is FQP3. Okay. Maintain payment media format. Okay. That means this payment media format will tell us what is the payment media format we have to use for the incoming payment. So let us go to FQP3. SAP is already given, and these are all fixed as per the country's requirements. There's hardly any customization you have to do. SAP, that's why they have given already payment media format. If there are any exceptions, then you can copy it and then adjust it. Otherwise, you can straight away use the particular payment media format. So the transaction code is FQP3. So let's go to FQP3. FQP3. So here you can see various payment media format. Okay. Payment media format ACH, that is automatic clearing house, ACH pre-note, okay, PAX box, lockbox, so many are there. But we will also have a DT ASU, DTA AS0, DTA USO, okay, DMA, domestic payment transaction for the Germany, okay. So we can select it and then copy, change the country to IN, okay. So basically we can copy this particular document, particular payment format, or you can use it. But if you use it, then you have to change the country. We cannot make the existing country overwritten as India. Rather, we can copy it and then adjust the payment. Select and copy as ZP02. In our case, we'll say Z, we are using everything starting with basically 555. Okay, we'll do something with 5. So country is Germany. We'll have to make it as India. Okay, so let me copy this existing payment media and then copy, and then we'll make it as Z500. Z500 domestic payment format, data medium exchange. It's called DME. Payment media without the documents. That means you're not creating any kind of a physical paper document. It's an electronic document. Okay. So country, we have to make it as the India, IN, and then format name is DT0. Payment media output separated by the degree. In this payment media, what is the information? What is the company code? What is the house bank account, debit memo, credit memo? Okay. Basically, we are saying what is our company code in the format. In the payment media, we'll be saying what is our company code. That will be filled up automatically. What is our house bank? What is the house bank account? Okay. That means customer is having an account. What is the house bank? And debit and credit memo, the details and the amount. Okay. So they'll be filled up automatically, and then continue. Choose the names key from the allowed namespace. So it is okay. Get 500. Copy all the information and then continue. There are some function modules events are there. They also get copied directly for different payment methods. And then Jet504 does not exist, so we can delete it. So Jet500 has been copied. So if you select Jet500 event models for the payment media, 10, 20, and format parameter specifications, for them it is copied. So all the data, whatever data is copied. Okay. So I have created like that ZP01, ZP02. So we have copied a payment format here, media. Now after this you have to go to define the payment methods. Okay. Now the payment methods are defined in two ways. Okay. Jet500. I hope everything is correct. Payment media, country, DTS0, parallelization permitted. That means you will do the mass processing, parallel processing. Event models for the payment media format 0, 10, 20, 30, 40. Something was missing, but it is okay. It's not going to affect us. So supplements for the payment media format. Direct debit collection bank transfer. Bank transfer will happen for basically outgoing payment. Direct debit for the incoming payment. Okay. Text fields for reference. So how much the length should be maintained for each one of them. So all this information is already built in. So we will save it. Okay. Next activity is payment method. Okay. Payment method means basically In each country, they will allow a certain payment method. For example, direct debit is available in most of the country. In some country, they may not allow the direct debit, bank transfer or check. Okay. So depending on the allowed method of payment transfer, basically based on the clearinghouse, regulation, we have to maintain the payment method. First, you have to maintain the payment method for the country, and the payment method should be maintained for the company which is going to implement. Okay. So we have to go to IMG and then maintain the payment method, define the payment methods. The payment method is one-time activity. For the country India, what are the payment method? Or for the US, what are the payment method? Okay. So here I have maintained already for India because this is one-time method. So select India and then payment methods. Okay. So I maintained it as bank transfer, or you can call it as direct debit. Okay. You can call it as direct debit, because bank transfer will happen for the outgoing payment. Outgoing payment can be check or bank transfer. So we will say direct debit. So payment method for incoming payment. Okay. So payment method depends on for what purpose we are using the payment method. Is it for incoming payment or outgoing payment? Check is created if it is outgoing payment. Post office bank account. Post office bank account is used in separate in another solution which is called public distribution. Like insurance companies and all, they use the post office bank account where the insurance will be running from the government. So that is applicable to insurance. It is a separate IS solution there they've used. So payment method for the incoming payment, processing type is bank account. Okay. That means we must have the bank account from the consumer. Okay. We may have another payment method, incoming payment method as basically payment method for incoming payment with a payment card. Okay. That means in the business partner, we will maintain a credit card number. So every month we bill to credit card. Okay. That means like recurring payments, like budget billings is there. Okay. So like Netflix and all what you buy, we declare our credit card. So every month they will send the details. And if you want to cancel or anything, we can do it well in advance, 10 days before or 20 days before. Payment card, internal clearing or deposit account. So here basically India I have maintained. Now for India, we have to maintain the payment format. Okay. So since I already maintained, I will not change it. Let it be. For the purpose I've shown you how to copy, but we have maintained already JET 500, but only permitted for India. We are having JET 500, JET P01, JET P02. So let me retain JET P02 because it's already used once and it is working with the all the required data. So it doesn't matter JET 500, JET P02. So format supplement is 51.